coming week, all eyes will be on the G20 meeting that is due to take place in Osaka, Japan, on Friday the 28th and Saturday the 29th of June. Sometimes what goes on behind the scenes at these get-togethers of the great and the good is actually more important than what takes place and is seen in public. And that was certainly reportedly the case, for example, in 2016. Now that was when the so-called Shanghai Accord was struck to talk down the dollar and help stabilise global financial markets. This time around, everyone's going to be looking to see if President Trump of America and President Xi Jinping of China can reach an agreement on trade. Remember that after the last G20 meeting in Buenos Aires, Argentina in November, Trump said that we would have a trade deal by March and that he would slap extra tariffs on Chinese goods if we didn't. Well, we didn't get the deal and he didn't apply the tariffs, although the dispute over Huawei has blown up since then. Financial markets are now hoping that Trump and Xi will reach a deal in Japan, not least because global economic data is looking spotty and central banks are getting edgy about growth. If you want to try and judge global trade flows and economic growth for yourself, the website of the Dutch Bureau for Economic Policy Analysis is very useful, as it releases a monthly World Trade Monitor. CPB.nl is the website. The latest data release covers March 2019, and we can see the year-on-year trends in global trade volumes since President Trump's US presidential election victory in November 2016. We can see that right here. It looks pretty ugly, although that recent recovery is welcome, and investors and economists alike may well be hoping that Osaka helps to break the US-China deadlock and foster what could be a nascent upturn. Company-wise, a handful of FTSE 100 firms are due to release an update, issue results or host an annual general meeting this week, and a select number of mid and small caps are slated to do the same. Names that may be worthy of note include cruise line giant Carnival on Monday the 24th of June, retailer Carpetright and white van supplier Northgate on the 25th, transport group Stagecoach, oil services and equipment specialist Wood Group and Tullow Oil on the 26th, private equity investor 3i, pubs firm Green King and support services expert Serco on the 27th. But for me, the stock most likely to cause a big fuss in the week ahead is another support services company, Bunzl. The FTSE 100 member is due to report first half a trading update on Wednesday the 26th of June. By way of a reminder, the company supplies the things that other firms need in order to do their own business, but not items they'll actually sell to their own customers. For example, Bunzl supplies disposable coffee cups to cafes, food wrap to supermarkets, hard hats to building sites, cleaning materials, bandages and rubber gloves to hospitals, and so on and so on. Unusually, Bunzl's first quarter trading statement in April didn't actually please everyone, and the shares took a bit of a pasting, with the result that they've really gone nowhere fast for the past year, and in fact for the past 3 years if you look at it further back. Bunzl revealed that sales growth on a constant currency basis had slowed to just 2.5% year-on-year in the first quarter, while underlying growth excluding acquisitions was just 1.5%. That represented a big slowdown from the 9% increase on a constant currency basis in 2018 and the underlying improvement of 4%. The first quarter also paled compared to the growth rates that Bunzl's generated pretty consistently for some time. As a result, analysts will be homing in on these sales growth numbers on a stated, constant currency and underlying basis to see if momentum's got better or worse after that rather weak first quarter. Also, look out for any commentary on regional patterns, because it was America that was the real source of Q1's disappointment. Bunzl flagged lower sales in grocery and retail in particular, thanks to a lack of volume growth and the absence of price increases. Do note also that Bunzl won some additional grocery business in the States in Q2 last year, so the base for comparison is actually going to get tougher. Now, Bunzl doesn't normally discuss profits in this particular trading statement. It leaves that to the actual interims, and they usually come out in August. However, just in case the company does talk about profits, analysts will be checking out two things. First, the operating margin. Bunzl's return on sales has been pretty stable around the 6.5% to 7% level for the last decade or so, on an adjusted basis, as we can see here. Although the stated number has been more volatile owing to restructuring costs relating to the companies purchased. The second one to look for, well, that's the headline pre-tax profit number. For 2019 as a whole, Analysts are looking for mid-single-digit percentage profits growth to around £580 million. So that's your yardstick for any comments about the first half. As a final point, watch out for any commentary on further acquisitions. Bunzl does look to supplement organic growth with bolt-on purchases. Thank you for watching, and I look forward to seeing you next time.